Hello everyone, and today we're going to practice the bookkeeping control, and that will be practice assessment 2 from the AAT website. So today we're going to practice our assessment 2 from the AAT website, and that's for the bookkeeping control for the level 2. And this paper is quite straightforward. There are a few questions will be in the exam, and exactly if we can make ourselves ready for that, we'll know what question will be question number 1, which question will come question number 2, which question will be question number 3. So we'll not be surprised on the exam day, because if we make ourselves ready for every single question expecting in the exam, and we're going to see the same question in the exam, so there will be nothing like came in the exam before, or it will come in the exam and we have no idea. It's not going to happen. So let's have a look. We're expecting 10 questions in the exam for 1.5 hours. And if we prepare for this exam and if we practice few questions, we'll understand like how to answer, and but we'll be definitely completing the exam before the time finish. So let's have a look. The first question we have here, that is from the payment system. Now, this is a very common question. Number 1 will be from the payment system. Now, let's read this question. It says, organization use different payment method. Identify the characteristics of each payment method below, selecting the most appropriate answer. So they give us some payment method, they give us some situation, and they are asking reduce the fund on the same day on the later. Before I start this question, I want to tell you a very simple method to identify how to identify which payment method the payment will be reduced on the day of the payment, and which payment method will reduce the fund later on. So there is only 2 payment methods, only 2. One is check and one is credit card. One is check and one is credit card. Only these 2, the payment will be reduced. The fund will be reduced later on from the bank. That means if I make a payment today by using my credit card or by using the check, so the money will be still on my bank account next 3 days. So it's not going to be vanish from my bank account immediately. So only this 2 is the later, but any other payment method we have that will reduce the fund on the day of the payment. That means immediate reduction from the bank balance. So if you remember this 2, this only check and the credit card will be later on, and any other payment method we have, that will be immediate effect. So that will make our life very easy. And if the question said money withdraw from the till, this is sometimes tricky. If the question says money withdraw from the till, remember that if we take any money from the till, the balance on the bank doesn't change at all. So because of you taking any money from the till, there is no movement of the cash or the bank, because if you take the money from the till and till have no link with the bank, so there'll be no movement of the cash from the bank. So you have to say there is no impact. Anyway, let's read this question now. The first one, we have check, and we already said if there is a check, the payment will be reduced later on. So from the comment, we have to find something. What is the most suitable way when we use the check for a payment method? Remember, only if we need to post something to the supplier. For example, if the supplier said, post the payment. Now we cannot post the debit card. We cannot post the cash. We cannot post the bank transfer. So only the way we can make the payment by post, that is check. So we can send the check to the supplier if they ask for the post. So they're saying payment for the high value, making a payment online, making monthly automated payment. No, not all of this. And making a payment by post to a credit supplier. So if we need to make a post to a credit supplier, we can use this method, that is check. and the fund will reduce at later date. Remember that the fund will not be reduced on the same day of the payment. The fund will reduce from the bank later date. Credit card, we have a same story. So credit card, when we have to buy something, normally from online. For example, if we buy something from online and we have to pay for that. So the amount is normally not very high value. So making an online payment to purchase a good. So for example, if I need to buy something from online, then in this case, I can use my credit card or debit card, because if I buy something from online, I cannot use the check or I cannot use the cash. And again, the credit card will be later date. Remember that credit card is not immediate. Credit card and the check, only these two payment method, the funds will be clear from the bank later date. Then the direct debit. Direct debit is like agreement. So making a monthly payment on the same day to the same supplier, but variable amount. Remember that the difference between the direct debit and the standing order is direct debit amount can vary. For example, let's say you pay your gas and electricity bill. So gas and electricity bill can change every month. So it could vary. So this month, £100, next month, 120. You cannot make a payment by standing order for your gas and electricity, because the payment goes up and down. So if you pay a rent to your landlord, then the payment is always fixed. So in this case, you can use the standing order. But direct debit will be for your mobile phone contract, for your gas and electricity, so where the amount can go up and down. So he said making a monthly automated payment of variable amount. Remember that variable amount and not the fixed amount. If we go for the fixed amount, then it will be our standing order. And this one, the fund will be reduced on the date of the payment. So it's not like later date, it is on the day of the payment. All right, the next one we have here, it is important to regularly reconcile the cash book with the bank statement. So you check the cash book bank column and with the bank statement to see everything is matching. So basically you do it regularly. And why it is important to do it regularly? Because they said to check the total amount of cash sale, no, to check for any error on the bank statement or in the bank column in the cash book. So they said if there is any, like for example, the error coming between the cash book column and the bank column, so you can find it out. So bank reconciliation is the way so that we can check regularly to identify, like, is there any difference coming with the bank column and my cash book column. So he said to find the error, to check any error, because I might forget something and the bank might forget something. So we need to find the reason. Is everything is up to date? If it doesn't match, you have to do the reconciliation. All right, the next one we have here, that is for our error and the suspense account. Now, error and the suspense account will be definitely in the exam, so make sure you do enough practice for that. So this one, you have to identify when the suspense account will be created, or when, even though there is some error or mistake in the trial balance or in the recording, but the trial balance will be still balanced. So even though there is a mistake, my trial balance will be still balanced. And when there is some mistake, the trial balance will not be balanced. So you have two types of error. For example, if this is my trial balance, and there are few errors, even though there is errors, my trial balance will be balanced. So that means the debit side and the credit side will be equal. But there are few errors. Because of that, my trial balance will not be balanced. So that means the debit side will be something and the credit side will be something, and it will not be balanced. So let's have a look. The error. The first error we have here, it says sales have been recorded correctly in the VAT and the sales ledger control account, but debited to the sales account. Now this one is like what happened, like if you make a credit sale, try to understand what will be the journal for that. So for the credit sale, the journal supposed to be sales ledger control debit, VAT, so liability is a credit, and sales credit with income. So these two credit will be equal to the debit. But what happened if we have this situation? They said sales have been recorded correctly in the VAT and the sales ledger account. So VAT, this one is correct. Sales ledger control account is correct, but they make it debited to the sales account. Now sales supposed to be credit, but by mistake, if I make it debit, what will happen? So if I make it debit, so my debit will be really high. So my debit side will be higher and the credit side will be lower. So debit and credit will not match. If debit and credit doesn't match, the suspense account will be created. So I'll say because of this mistake, will cause an imbalance in the trial balance. Imbalance means the trial balance will not match. It will be not equal, and will not cause an imbalance in the trial balance. So we'll choose the first one because it will cause an imbalance. The imbalance occur when the debit side and the credit side doesn't match. If the debit side and the credit side doesn't match, it creates an imbalance. Let's look at the next one. The purchase of a computer by BACS has been credited to the bank account and debited to the office expense account. So when you buy a computer, what happened? The journal will be computer is a debit, and or if office expense will be debit, whatever it is, and the bank will be credit. Now here, the purchase of a computer by BACS has been credited to the bank account. This is absolutely correct because if I buy from the bank, my bank will go down, bank is credit, but debited to the office expense. It's not expense actually, it is an asset. So when you buy a computer is an asset. But the question is, if the bank is a credit, this is correct. Now office expense is also debit, isn't it? So office expense is a debit, and the computer is asset also debit. So that means even though we done a mistake, but still my trial balance will be matched. Why? Because instead of writing the computer, I have write office expense, but unfortunately both are debit. So if both are debit, so it will come to the debit side and my bank will come credit side. So my trial balance will be matched. So the reason it will be matched because the amount is equal. So the trial balance only care about the amount, not about the name of the transaction. So that's the reason even something is a debit, if something is a credit. So if even we do opposite, so debit will come to the credit and credit go to the opposite state will be matched. But here bank is a credit, that's fine. But instead of writing the computer, we write office expense, but both are debit. So that's the reason the trial balance will be matched and it will not cause imbalance. So you said it will not cause an imbalance. The next one we have a cash drawings have been debited to the cash account and credited to the drawings account. So they're done opposite. It's supposed to be drawings debit and cash credit. So drawings debit, cash credit, but we did opposite. We said cash debit and drawings credit. So what happened? The drawings come this side and the cash came this side. But it's supposed to be drawings here and cash there, but doesn't matter. Amount will be same, and that's why the trial balance will be matched. Even though this is a mistake, even though this is an error, but my trial balance will be still matched because the amount will be equal. So I'll say it will not cause an imbalance. So it will be still balanced. Then we have VAT on petty cash payment has been recorded in the petty cash book only. If you write only one side, if you write only the debit side or if you write only the credit side, other side will not be equal, other side will not be match. So if you write only on the debit side, or if you only write on the credit side, so one side will be missing and the missing side will create the suspense account. That means the trial balance will not be matched. So I'll say this one will create an imbalance. It will not be matched, it will create an imbalance. And finally, discount received from a credit supplier has been omitted from the accounting record. If you forget something completely, the trial balance will be still matched and it will not create an imbalance, because if I forget something completely, for example, I have 100 invoice and for some reason I forget one, so I only enter 99. So my trial balance have no idea that I forget one invoice, so it will be still balanced. So that's it for our question number 1. So let's move to the question number 2. And let's have a look what you have there. Now the task 2 is here from our payroll journal, and we have to remember the journal. So you have 3 journal, the question asking here. The first one is asking for the wages expense. This is the total expense for the business. We'll take everything here. Then for the HMRC liability, HMRC liability is all about the tax and the national insurance. Remember that we do not pay the pension to the HMRC. Pension goes to the pension authority. So we only pay to HMRC the tax and the national insurance. So you're going to take the tax, income tax, and the 2 national insurance. One is from the employee and one is from the employer. Then the pension, will take only the pension. So let's write it down, the journal first, before actually we answer the question. So 3 journal we have to remember from here. The first one is wages expense. So this one will be wages expense debit and wages control credit. Remember, wages control will be everywhere. So when you're making the payroll journal, the wages control has to be there. Then number 2, we have for the HMRC liability, and HMRC liability is a liability, it will be credit. So wages control will be debit. Wages control debit, and the HMRC liability credit. And the next one, we have the pension. So pension is also liability. So wages control debit and pension liability credit. Anything we have to pay to the outside or to the third party, it is all liability we have to pay. So it will be credit. Now for the wages expense, we have to take everything. Remember that wages expense is the total expense for the business. So we have to take the gross pay, employers, NI, everything, to be honest, like whatever expense business make, we have to take everything. Now let's read the question. A small business uses a wages control account to record its payroll transaction. These are extract from the payroll of the 2 employee for the month of July. So we have a 2 employee J Moore and P Martin. We have to take everything. We have to take the gross pay. Then remember, the gross pay means before the deduction. Gross pay means before the deduction. That means inside of the gross pay, this income tax and the employee's NI and the employee's pension is already there. So when you're going to calculate the wages expense, do not take it again, because the gross pay means income tax, employee NI, and the employee pension already inside, because gross pay means before any deduction. If the question said net pay, then you take everything. So you have to add the income tax, employee NI, but the question said gross pay, do not take it again, otherwise it's going to be duplicated. Same for here, gross pay. So you have to add the employer's NI, and that will give us the total. So let's make the total, how much it is. So gross pay for the J more, we have a 2000 plus employers, and I have 182. For the Martin, we have a 1976 plus 178. And that was give us 4336. If the question give you employers NI, employers NIC, please take it. This question don't have employers NIC, but if the exam give it to you, make sure you take it. So we have to add it all of this. So we have to add gross pay 2000 plus employers NI 182. For the Martin 1976 gross pay and 178. If you added this 4, it will give us 4336. And the journal you already know, wages expense debit and wages control credit 4336. The next one we have a wages control and the HMRC. In the HMRC, you only pay tax and the national insurance. So you have a tax and we have a employee national insurance and employer, all three. So we'll take all these three. Because for the HMRC, we pay 2 national insurance and 1 tax. So we have a tax and the 2 national insurance. Added all of this. So let's add it all of this. 255 plus 158 plus 182. Then plus 218, 152. If we have more employee, remember we have to add everything. This gives me 1143. So 1143. 1143, or let me double check again. So we have a 225 plus 158 plus 182 plus 218 plus 152 plus 178. Sorry, it's 1113, not 4. So 1113. Make sure you add it carefully with your calculator, because this exam will be marked by the computer. So if you write the wrong figure, you will lose the marks. All right, the final one for the pension, we have only 2 pension. So pension 100 and pension 98, so 198. And that's it. So very simple. As long as we know how to do it, the journal is very simple. Now we're going to go back to the box and we just complete this journal. That's it. It's quite straightforward. So we have to go, we'll come here. The first one, wages expense, number 1. The wages expense, the journal was wages expense debit. So look for the wages expense debit and wages control credit. And the amount is 4336. And the credit 4336. The next one we have HMRC. So wages control debit, HMRC liability credit. So the debit will be 113 and the credit 113. Then you have a pension liability. So again, we said wages control debit and the pension liability credit. So the debit is 198, credit 198. So you have to remember all this journal, and we have to remember how to calculate the amount. That's it for our question number 2 for the payroll journal. So let's move to the next question, question number 3. All right, the question number 3 is just a journal. I think it's quite simple. All of us, you know how to do the debit and credit. If you don't know how to do it, I have a few more videos on the debit and credit. So watch that. It will help you to understand how to identify what is debit and what is credit. A business PR product has been started and the following transactions have taken place. The owner has invested 15,000 in a business bank account. Remember, if owner provide any money to the business, so that is capital for the business. So that time the capital will be credit. So if the capital is credit, what will be the debit? The money coming to the bank. So bank will go up. So bank will be debit. So you're going to say bank is a debit because money coming to the bank, 15,000. The asset will go up. And it's a capital because the owner giving the money. If owner give any money to the business, it's a capital. And capital is always credit. Journal to record the purchase of office furniture. So if you buy the office furniture is expense. So it's a purchase. Office furniture is expense. It's a debit for you. It's expense. That is 3780. And how do you pay it? Using the debit card. So obviously money will go from the bank. The bank will be credit. If you buy by cash, so the cash will be credit. If you pay by check or debit card, the bank will be credit because money will be reduced from the bank. All right, let's move to the next one. The next one we have here, this is an extract from the sales invoice issue after the business is started. Okay, invoice PR product to KP Limited. So we have invoice number and this and that, total amount 520. The terms is 30 days. Okay, the customer has now ceased trading weighing 520. Remember that if the question said that the customer ceased the trading, cease means the customer dissolved the business, the customer shut down the business, the customer closed the business. So the customer will not be able to make a payment to you. So if the customer closed down the business, so the money you're expecting from the customer, you're not going to get it. So it will be irrecoverable. So irrecoverable is always expense because when I make a sale, I'm expecting some money. So I said, you are my asset. But if the customer told me, I cannot pay you because I closed my business, I don't have any money. So I have to do the reverse journal. Now I have to say irrecoverable debt is a debit and the sales ledger control will be credit because this customer cannot pay to me. So when we make a credit sale, our journal is normally sales ledger control debit and sales credit when you make a credit sale. But in future, if the customer said, sorry, I can't pay, then I have to delete it. So I have to make sales ledger control credit because debit and credit like a plus and minus, it will be gone. And sales was a credit, it was income. Now I say recoverable debt, this is expense. So that will be debit. So this debit will reduce the expense. So the income will go down by same amount and it will be zero impact. Remember that this question always in the exam. So irrecoverable debt. So make sure you practice this question. So irrecoverable debt is expense is a debit and sales ledger control will be credit because the total outstanding balance will go down. All right. Let's move to the next one. The next one we have the VAT control account. Now the VAT control account also common in the exam, but it's quite simple. All you have to know, if we have to pay the VAT, if it is increase the liability, it will come to the credit side. If it is a decrease the liability, it will come to the debit side. For example, if I have to pay the VAT, I record on the credit side. If I can claim back the VAT, I'll record on the debit side. And after that, I will add the credit minus the debit to find the balance sheet. So let's have a look at that. The opening balance, normally always the credit balance. Remember that. Opening balance, always the credit balance, unless the question clearly mentioned to you it is a debit balance. It is possible the VAT balance can be a debit balance, but unless the question said to you it is a debit balance, always take the VAT balance as a credit balance. Then VAT refund. So if you receive the refund from VAT, it is not your asset. So in this case, you have to say obviously like this money, how much we have here, 23 and 74. This is already refund, and so we have to have a credit balance here. Now the opening balance. Let's read this question a little bit quickly. At the end of the June, the debit side of the VAT control account 4316 and the credit side is 1942. So it's look like the debit side is higher, isn't it? The question said the debit side is 4316 and the credit side is 1942. So let's find the difference. How much is opening balance we have? 1942. So 4316 minus 1942, and that gives me 2374. That means it's a debit balance. The question clearly tell us the debit side is 4316, so debit side is higher, and the credit side is 1942. That means credit side is lower, so it will have a debit balance. Very careful with this question when you read. And the VAT refund. So if you're expecting some money from the HMRC, that is your debit. But if the HMRC already paid to you, that will be your credit. Remember that. Cash purchase doesn't matter. It is a cash purchase or credit purchase. This will reduce your VAT because you're going to claim it back. Any VAT you pay on your purchase, you can claim it back. Cash sale. When you make a sale, you have to pay the VAT. It will increase your liability. So it is a credit. Discount allowed. If you give a discount to your customer, you're not going to pay the VAT on that. So discount allowed, you can put on the debit side because it will reduce your liability. So any discount you allow to your customer, you're not going to pay VAT on the discounted amount. Discount received is on the credit side because if you receive any discount from your supplier, you have to pay VAT on that. So it's not like you receive the discount and you're going to claim that VAT. You cannot. So any discount you receive from your supplier, you cannot claim VAT on that amount. Purchase, again, purchase is debit. Every time if I buy something, I'm going to claim VAT on that. Purchase return is a credit. Remember that if you return something after you purchase, so even if you claim the VAT, you have to pay the VAT back, because if you return the product, you have to return the VAT as well. Sales is always a credit because if you make a sales, you have to pay the VAT to HMRC. Sales return is a debit because if the customer return to you, you're not going to pay the VAT. For example, even you already paid the VAT, after a few weeks or few months, if the customer return to you, you have to tell the HMRC, listen, the customer returned to me, so it's not my actual sales. Can I have my VAT back? I think that's it, is our VAT control account. So it's not very difficult one. So all you have to know if the liability increase, if we have to pay on the credit side, and if it will reduce the liability, or you can claim the VAT from HMRCs on the debit side. All right, move to the next one, task 5. Task 5 is the reconciliation between the purchase ledger and the purchase ledger control. So let's try to do that. So purchase ledger and the purchase ledger control, let's talk about a little bit about that. Purchase ledger means the individual customer. So for example, S Limited, Lee Limited, P Limited, they are my purchase ledger, PL, purchase ledger. And the purchase ledger control means the total balance. Total balance. That means if I added all my supplier, whatever is the balance will come, it is called purchase ledger control. So purchase ledger represent only one customer, and purchase ledger control represent all my total, supplier, and total supplier represent purchase ledger control. So if I said purchase ledger, that means I'm talking about only one supplier. But if I talk about purchase ledger control, that means all the supplier total balance. So purchase ledger control total balance, purchase ledger on individual balance. Ideally, if I added total purchase ledger, it's supposed to be or should be equal to the purchase ledger control. But if it doesn't match, you have to find the reason why it is not matching. So let's read this question. They are saying these are the balance in the purchase ledger. That means it's my individual balance, the individual suppliers. So we have some supplier credit balance. Credit balance means we have to pay the money to the supplier. Credit balance means we have to pay the money to the supplier. So we have here few supplier. We have 1, 2, 3, 4, 5. So you're going to add all of this. We have to pay this money, and we have some debit balance as well. Debit balance is happen when I overpaid. For example, if I overpaid, or for example, if I buy something and after I return, so supplier need to pay my money back. So this is the debit balance. So I have a 2 debit balance. What I have to do, I have to add all the credit balance and minus this 2 debit balance to find how much is the balance I need to pay to my supplier. So let's do that. So added all the credit balance, 10,416 plus 8091 plus 15,705 then plus 1277 plus 3033 minus 418 minus 673. And that gives me 37,431. So my total purchase ledger balance is 37,431. And it should match to the purchase ledger control, because if I added all my supplier, it should actually match with my purchase ledger control. But if it doesn't match, you have to find why. Then the next point said the balance of the purchase ledger control account has not been recorded. The account had been entries amount 29 and the credit entry is this. So debit entry is this, credit entry is this. So again, we have to find the difference, credit minus debit. So 67,522 minus 29,644. So you do this minus this, and that gives me 37,878. That means it's not matching, isn't it? You have to find the difference. And the difference is 447. That's the difference between the purchase and the purchase ledger control. So let's do that. The first one, they said purchase ledger control account balance. This one we just done, 37,878. And the next one we have total of the balance in the purchase ledger, and that is 37,431. This is the purchase ledger total balance list, and the difference is 447. Okay, now what could be the possible reason? The possible reason, we have to be very careful with that. I have a lesson for find out the reason, how to find it out, the reason for the reconciliation. Watch that video, it will help you more to understand. But here you can see here, my purchase ledger balance is lower and my purchase ledger control balance is higher. That means you have to find a reason. Either that reason will make this one down or this one up, because we want is has to be equal. All right, so there should be a reason question here for the 1 marks, but don't worry too much about that, because it's only for the 1 marks. But this question could be tricky, as I said. Like I have a video for that, how to find out the reason. You can watch that, it will help you. Which one of the following reason will explain the difference you calculated in? Good purchase were entered twice in the supply account. No. Good return were entered twice in the purchase ledger account. No. Then discount received were entered twice in the purchase ledger control. No. A payment was entered twice in the supplier account in the purchase ledger. This is the one. I'll tell you why. Because, for example, this is my purchase ledger. And my opening balance, for example, 100. And I have a payment like I received from the customer, let's say bank 10, and again bank 10. So my balance CD is 80. Now what happened? A payment was entered twice. So basically it was only one payment. By mistake, I wrote it twice. So if I remove one, that means my new balance CD will be 90. That means if I correct that mistake, my balance CD will go up, and that will be equal after. So this is the possible reason. But as I said, if you need to understand more, you can watch the other video I have that will help you understand everything about how to find the reason. All right, let's move to the next one. The next one we have here, that is sales ledger control. This is the opposite of the purchase ledger control. The opening balance always asset, so it will be debit. Remember that. Because sales ledger control represent how much I'm expecting from my credit customer. Sales ledger control represent how much I'm expecting from my credit customer. So it's my asset, it's my debit. Then we have a payment received by check. So if the customer pay to you, that will reduce your balance, that will be credit. And discount allowed, if we give a discount to my customer, it will be credit. So anything that will reduce the customer balance, it will be credit. Anything will increase the customer balance, that will be debit. Goods sold, if I sell to that customer, so customer need to pay me. So it will increase the balance, debit. Goods return, it will decrease the balance, because if the customer return to me, he's not going to pay for that. It will reduce the balance. Payment received in cash, doesn't matter how I receive, cash or credit, so it will reduce the balance. Irrecoverable debt, so if I'm not expecting any money from this customer, so for any reason, so it will reduce the balance, it will be on credit. And journal debit to the error correction, so debit, so we need to put on the debit side. There's a journal debit to the correction, so we'll put on the debit side. And after that, all you have to do, you have to add the debit side, all these three, and minus all the credit side to find the balance. So it says what will be the balance brought down in the sales ledger control account at 1st of August. So the balance will be all the debit minus credit. So if we do that, the balance will be 51,354. And remember, the opening balance for the sales ledger control is always debit, is asset, because you are expecting some money from your customer. If it is a purchase ledger control, that time it will be opposite, it will be credit. All right, so I think we'll stop here today. Obviously done 5 questions for this video. We'll stop here. And on the next video, I'll try to make from 6 to 10. So the next 5 questions. Hopefully this video will help you to revise your bookkeeping control. And if you have any question, if you need any support from me, you can email me. You should find my email on the description. And hopefully, if you practice well, you will get a good score in your bookkeeping control exam, and you will understand how to do the bookkeeping for your any company, and obviously like in the workplace, how does it work. Thank you very much, everyone, for watching.